The price of Bitcoin got rejected from $66,800 region. From the anchored view were pulled from $82,000, $83,000 region down to this $66,800 region. Now the biggest question is, are the bulls still in charge or the bears are taking over? We're going to answer that by taking a look at this price action on a lower time frame. If you're just joining the channel, this is Caspar. Please, whatever content I'm going to be releasing here today is strictly for educational purpose only. I am not a financial advisor. Please do your due diligence before investing your hard-earned money. And if you do not know how to trade, please get educated. So without wasting more time, let's get started. So the price of Bitcoin got rejected from this downtrend anchored VWAP earlier this week, and that was Tuesday precisely, and that level was in perfect confluence with this previous range high volume node, which was at $66,800 region. So it was, that level was in a perfect confluence with several exchanges. They all tapped this downtrend anchored VWAP on Bybit USDT chart, on Binance USDT chart, and on Coinbase USD chart. So those three exchange price reaction made me give the notification that okay, the price is currently rejecting from the downtrend anchored VWAP on Bybit and on Binance. I treated this short as a scalp trade, but it ended up being the biggest trade of the week. I think the biggest trade of the week took place on Monday and on Tuesday down to yesterday before we enter some bigger shots. So going to lower time frame now. So there's nothing much to update on the chart. Looking at this range volume profile, you see the price is currently reacting from this point of control here, and after we broke down from this region, price is currently reacting to the downtrend anchored VWAP, although I'm still expecting an SFP of the high, taking out this previous high at $67,250 to $67,300 region. Now we had some amazing trade earlier this week, which is what I'll be going through at the end of this analysis. So right now, simply looking at the price, you see that we have some kind of liquidity here. So if price fails to hold this region, pull the fib from this low to this high, from this low to this high at first, if price fails to react or bounce from this golden pocket, price might eventually take out the entire low that we have here. Price might eventually take out that region to bounce into this previous week, to this weekly outlook that we did earlier the week on Sunday, yeah, thereabouts. So that's one scenario, but you can see the price is currently reacting from the point of control. So if we gain acceptance below the point of control of the range, we might have the full rotation of the volume profile down to the value area low. There are some confluences on that region that I'm going to be revealing very soon. So if we start closing candles below the value, the point of control, and refuse to reclaim it, perhaps we retest it as resistance, we might have a full rotation of the volume profile straight down to the value area low, which will now take the price to $60,400 region. Then alternatively, if you look at it broadly, zooming out on the price action, we have this region of price to be support, slightly below the value area low. We can add the value area low to it. So looking at it now, you see this is simply support, and we've had a deviation below support. So if price keeps coming down, we could have another support here, price respecting this support region to bounce to upside, which we now leading to perhaps inverse heads and shoulders for pattern traders. So that's all for the pure price action analysis. Then if you bring this level down, this fib retracement level to this low, and check the overall, you see that the value area low is in perfect confluence with the 0.725 fib retracement, and also is sitting between the golden pocket and 786 region. So the last line in the sand for this price action right in front of me here would be, structurally this was the low that took out the high, so this low ought to be protected. Let me take it out. This low ought to be protected. Then if it's not protected, it will make more sense for it to serve as liquidity. We don't want to see candles closing below this line, because this was the last higher low that made the current higher high. So if price starts closing below this liquidity level, that will increase the probability of price going smashing into this golden pocket 786 region, it also in confluence with this value area low of the volume profile. So this area of price, I'll be much more interested in taking a long from here. Then if we lose this region and fail to bounce from the value area low, confluence with golden pocket 786, then there are some horizontal level that I'm going to be revealing soon. Then we might go take out sub 57k region to lower level, but for now, until we start losing or breaking down bearishly to start losing the value area low, this level of price is still very much interesting to take a long. So the first area to take a long trade would be here, and the second area of price to take a long trade we also the second area would be here. I'll be very much interested in here to take an attempt on a trade. Perhaps price will get here tomorrow, and don't forget guys that this will be a break of the trend line. Although I don't trade trend line that much, I don't trade trend line, I have my own style of trading, but that doesn't mean I don't put all that into consideration. So going to lower time frame, we can see that this is currently, let me use the horizontal ray, we currently have, okay, price has taken out this region on the Coinbase, wow, but on Bybit is yet to be taken out. On Bybit, this liquidity has not been taken out, so I will still expect more downside, perhaps another low. Can I move this to this region? So another low into this region. Perhaps we could get this price action tomorrow. Then SFP of this low, back up. This is when I'll be interested in going long. But if we start closing candles bearishly below this region, that will not be good for the bulls. And the last region that the bulls will have to defend will be this area of price, which I've highlighted earlier on. So going to 2 hours time frame to compress the chart further. So this will be the area for the bulls to protect these two zones at 62,400, $62,500 region. So for the bulls, pay attention to $62,500 region, and also pay attention to this other region of price from $60,400 region, from $60,400 or from $60,800 region down to $60,000 region of 59.5. Pay attention in case there is a bullish reaction. This will be the last zone for the bulls to defend the price, because it makes more sense if price gets here after sweeping. That will be a sweep of this ugly higher lows. So that's that. Then if we break the trend line, we could backtest it to tap here and bounce, or alternatively we could come down, bounce from here, then break it down and continue from here. Those are the two bullish scenario, and the price is currently downtrending, and if this region fails to hold, we cannot try to catch the retracement on the drop. So looking at the horizontal levels I have on my chart, let's check the weekly, the daily, the weekly naked point of control. So that's that for these horizontal levels. Those are the high volume nodes on price. So these are the horizontal levels of support and resistance we have on the chart. So you can see that liquidity sweep below this low will also be in perfect confluence with the daily horizontal support level, so which is more reason why I would prefer price to come down, sweep the liquidity and get a bounce, then to continue upward. And if that level fails, the next area I'll be expecting price to bounce will be this golden pocket and support resistance flip of this region, which would also form a perfect inverse head and shoulders. And we also have weekly naked point of control and weekly horizontal support level below that region. But if we start losing this region and start tapping this daily horizontal support level, chances are high for price to go below this region. So that's all I have for the weekly outlook, and let me show you the previous weekly plan that we had. And the reason for this horizontal lines is to measure the high volume nodes of this volume profile. You can see that every high volume node on this volume profile has perfectly acted as area of support for price. This is one high volume node. Price got here, bounced. You can see that the first horizontal line acted as support at $62,500 region. Then the second high volume node on the volume profile acted perfectly as support at $61,800, $61,700 region. And the other high volume node that has not been tested is still this region, which is $60,700, $60,800 region, which is also in perfect support, serving as this region is serving as perfect support and resistance flip. So that's it. All these high volume nodes on the volume profile is also an area where one needs to pay attention to, not just the value area high and value area low too. So that's that for that. So the trade plan for last week was this. The first one was this, waiting for price to get to this region. You can see how this uptrend anchored VWAP has been acting as perfect support for price, and perhaps we eventually get that flush tomorrow or later midnight tomorrow, early hours of Monday. If this uptrend anchor VWAP fails to bounce price, which will be in perfect confluence again with 786. So this will be in perfect confluence with 786, uptrend anchor VWAP 786. So if this fails to bounce price, and I'll be expecting another bounce from this liquidity, then that's the pro plan 1. Then we equally have this for last week. We're expecting price to bounce from this golden pocket. So now going to Bybit, I'll show you the trades we took over the week. So here on Bybit USD, here was the setup plan that we took through the week. We have this horizontal ray. So the one I failed to label with price was expected to be a scalp trade, this short from this region and this long from this region, but I was expecting this long to fail. Eventually it got to the take profit, and from there, after getting a reaction on Friday yesterday from the back test of weekly naked point of control and weekly horizontal support level, which was flipped into resistance, this was where I entered the short. I'm still currently on this short trade, waiting for the final leg to the downside, although I've taken partial profit, so I might close the entire trade there depending on what I see on price. And which other trades? That's for the setups. We probably have this. Let's check the USD. So this trade was a break-even trade, bounced, then dropped. We equally have other setups here. This was also the setup that was given on early hours of Sunday after the World Cup, and the short from here to the entry, then from this long took it back up, and that's all I have for now, guys. So don't forget to always trade responsibly. Do not take it as a financial advice. That's just me flowing with the chart. So do enjoy the rest of your week. Always trade responsibly with stop loss.